Okay, I see a lot of people today. This was a very oversubscribed session, unfortunately. So thank you so much for joining. First of all, I just wanted to introduce myself. My name is Serena. Alongside my wonderful colleagues who will be speaking later, I lead the campus recruiting team for investment banking across the region. And working with you guys, working with the bankers that I get to kind of hear from today and listen and meeting you all is really truly my favorite part of the job. And so today's session is a very exciting opportunity to hear from the very bankers that are on some of our biggest deals to date. And we're kicking off with a really, really groundbreaking one. So before we start, I just wanted to do a few quick reminders. Number one, and this is the most important thing, this session is completely private. So those who have been invited, including everybody in the room, the link that you've been given is specific to you only. And that also means that you are not allowed to record anything on this session. You're also not allowed to post anything about what we said on the social media, just because even though this is a fully announced deal, this session is indeed invite only. It is a closed door session. So we seek your understanding to not record anything we say or anything from the session, and do not post this on LinkedIn or anything like that. The second reminder I do have is please do change your name to your name. And then if you want to put bracket your school, that would be great. We will be removing people without proper names in their Zoom names to protect the privacy of the firm, just because we can't get it completely right. We can't, filter out anybody who might not be an actual student. So just to protect yourself and protect us, please change your name to your actual name and then your school as well, just so that we can also cross-check with our attendee list. And finally, just for some quick administrative bits and pieces, there will be an open Q&A at the end where we will invite you to ask questions. However, at any point that you want during the session, if you're like, oh, I have a really good question, you can scan this QR code. It goes to something that we call a Mentimeter, which I know a lot of you are familiar with. It will give you an opportunity to submit questions online, and we will go through those questions. Otherwise, if you would like, we encourage you to ask those questions live at the very end. The three bankers that you see that will be presenting today, there are I've worked with all three of them in a super day or recruiting capacity. They really, really love meeting with students. They also have a really good instinct with, meeting with students and figuring out who will do this job well. So from my perspective as a recruiter, this is a really good opportunity to make a really strong first impression. So make sure that if you want, save your questions for the end and ask them live, or if you would like, feel free to drop them in the Q&A. With that, I'd love to kick it over to our three wonderful bankers, Shao, Jane, and Stephen, who were on the Starbucks and Bori Capital JV to talk us through the deal. I'm going to kick it over to Jane to start. Thank you so much, Jane.
Thank you, Serena, for inviting us, and really nice to meet you all for this session. Maybe I do a quick introduction about myself, and then I will pass to Shao and Stephen to do a quick intro, and then we can talk about in more details about the transaction and the takeaways we learned from the transaction. So first of all, my name is Jane. I joined Goldman back in 2021 in consumer and retail group, and I'm currently based in Beijing. And before joining Goldman, I worked at a Chinese investment bank in Hong Kong, and have been spending for more than 10 years in investment banking Korea. And for now, I work with Sushil and Teresa and all those like consumer retail group bankers, and covering Chinese clients and also broadly Asia clients. And in terms of products, we work together on IPOs, capital market transactions, and also M&A transactions. So one fun fact of myself, I had a 2-year-old twins. So bear with me if you hear any noise in the background. I would say that putting kids into bed is one of the most complicated projects in my banking career. So with that, I will pass the phone mic to Shao for a quick intro.
Pleasure to meet you all. I'm Shao. I'm the VP in the M&A team in Hong Kong. So unlike Jane, who works on consumer retail sector, I'm a sector agnostic. I work across sectors including consumer retail, healthcare, industrials, but only for M&A transactions. We look at transaction regionally across Asia, but with a focus on Greater China. Pleasure to meet you all.
Hey everyone, it's great to be here. So my name is Steven. I'm currently an executive director with our consumer and retail team. And to give you a bit of background, I was born and raised in Beijing, and I completed my undergrad at the University of Rochester before moving to New York to get my master from Columbia. My journey with GS began in 2020 when I joined as an analyst from Lazard's Hong Kong office. With that being said, I'll pass back to Jane for the overview of this deal.
Sure. So happy to kick off the sharing for today. So for this session, I will talk more about the transaction overview, the background and the rationale for this transaction, and also some takeaways for our other MNC clients. And then I will pass to Xiao to talk into more technical stuff, including how we design the process and what the valuation looks like. And finally, Steven will help us to go through how we work together with the US team and what's a typical day of a junior staff on this project. So back to this transaction, as you can see, and in many news and media, it has been a very landmark deal of the year. So basically, Starbucks, the group sold 60% and control stake of its China business to Boyu Capital. And in the meantime, it retained 40% of the stake and continued to own and license the brand, the Starbucks brand. And Goldman, we are the exclusive advisor to Starbucks Group. And after the deal closed, so the Starbucks China will become a standalone JV as a franchisee or licensee, and Starbucks Group will deconsolidate the China business and become the licensor of the business. So you may also notice that the China business is valued at around $4 billion on a debt-free, cash-free basis. And there's another number, basically $13 billion as the total value to be realized by Starbucks. So Xiao will provide further information on what is the difference between these two numbers. But all in all, it has been a very large transaction in the region and in consumer and retail space. So the deal has been closed on March 31st, and Starbucks China also hosted an internal event for all its partners or employees. So you may see from some Red Note posts early this month, like Molly, the CEO of China business, Cassie Smith, the group's CFO, flew all the way from US to Shanghai, and also Alex Wang, who is the Boyu partner who led the deal, shared their vision and plans for their China business and what's gonna be changed and what's not. So if you look at the announcements from both Starbucks and Boyu, when they signed the deal, there are a few keywords which are also highlighted here in our case study shown on the screen, including the global coffee leadership, world-class customer service, that's where Starbucks stands at, like local knowledge, market insights, that's partially like why Boyu, and also greater innovation, local relevance, and expanding into smaller cities, accelerating the growth. So that's the plan for the partnership. And we can discuss in further details shortly. So that's a brief overview of the transaction. And back to the background of the rationale for this transaction. So Starbucks has been our long-term client for many, many years. And our US team has been helping them to evaluate different business and strategies in different markets. So for China, we have been in dialogue with them for like 3 or 4 years ago, when the market has broader concerns around geopolitical tension or risk. And since then, the discussion topic has gradually shifted from the geopolitical tension to how to reboot the China performance, what happened to the China market, and how they could compete more effectively in China. So basically, the market has changed a lot. If we look back a bit, so Starbucks, when they entering the China market, back in 1999, they worked with several partners to expand their business in each region. For example, they worked with Tongyi for East China, and they worked with Maxim's for South China. And later on, from 2010 to 2017, Starbucks Group, they gradually took back the partnership and grew the business on their own. So it has been like a fully like self-owned business as they see the great potential in the China market. And later on, there has been like new consumer brands booming, and all those like tech giants entering into the delivery business. And that's, if you look at the recent 5 years, the freshly made drink sector in China has been evolving dramatically, with Luckin being a new joiner into the market, competing with Starbucks and grabbing market share and expanding at a very fast pace. And KFC, McDonald's launched their own coffee concept, and there are also other coffee players like Amstand, Minor. So there are more and more competitors in the market. And on the other hand, there are also milk tea players like Mixue, Guming, Chaji, Hei-Tea, Naiyuki, etc., etc. They are also competing for the consumer's mind share in a broader freshly made drink sector. So, like not same as like 20 years ago when Starbucks just entered the China market. They are definitely a dominant player in the market, and they are the symbol of coffee. But for today, like consumers could buy a cup of latte from Luckin at only 9.9 RMB, and perhaps and also buy a lemonade from Mixue for only 4 RMB. So the market has changed a lot. And the competition are all over the place, from product offerings, price points, store locations to O2O and delivery business. So it became a bit hard for the headquarters in Seattle to track the market trend down the ground efficiently and effectively. And that also triggered this strategic initiative on what they can do for their China business, and ultimately landed at finding the right partner to accelerate the growth in the market. As they acknowledge that like the local partners will have local knowledge and probably more resources down the ground, they could help them to further optimize their stock portfolio, entering into lower tier markets, and further improve their digital capabilities. And in addition, their market insights could help Starbucks to further improve and enhance their product innovation, and to launch new marketing campaigns, etc., etc. And in the meantime, with this kind of strategic initiative or options, the headquarters management can focus more on their US business or other regions. On the other hand, how the sponsors or the potential buyers view the Starbucks. Although there is intense competition in the market, the coffee market has been still growing and with great white space for the future expansion. And Starbucks as a brand is still dominating the premium coffee market in China, and consumers also value the Starbucks brand. So with over 8,000 stores in China, Starbucks brand equity has been a very valuable asset and very attractive to any sponsor and PEs, as they see great potential for partnering with Starbucks and boost for the future growth together with them. So that's the general background and how they come up with this kind of idea or strategic initiatives to launch the process or this transaction. And finally, I want to share another point that this is also a good example for our MNC initiatives, as other MNCs when they considering their strategy in China, they also take Starbucks case as one of the examples for them. And we have been in regular dialogues with multiple MNCs to explore strategic alternatives on their China business. And we have been the market leader and expert in this regard as well. And so depending, and also I want to emphasize one point is that serving MNCs is a 1GS initiative. So we closely work with our US team, EMEA team, and from different regions. And together we come up with ideas and proposals and solutions to our clients. And with the Starbucks case, we have been further enhance our toolkits for our MNC clients. And depending on their objectives, actually there are the strategic options for them range from double down in China to partial or full exit from the China market, as different MNCs operating in different sectors are seeing different opportunities or maybe facing challenges for their China business. For example, there are some MNCs prefer to exit certain business units to refrain from business distress or structural challenges. And instead, they can allocate those proceeds to higher priority investment projects at the group level. And one example for this is Reckitt. We helped them to sell Mead Johnson China business to Primavera in 2021. Well, there are also some MNCs, they prefer partial stake sale, like Starbucks. Well, they find a right partner for their business controlling stake, but they still retain a meaningful stake, like 40%, so that they can enjoy the future upsides and growth of this asset and business. And there are also some MNC clients, they chose to get their China business listed in Hong Kong or A-share to expand their access to the local capital so that they can leverage funding from capital markets to fund the local growth and also accelerate the development of the local capabilities, such as Budweiser APAC and also Jinlong Yu. They got listed in A-share. And also some of the other clients, they increased their stake in China business. One interesting example is McDonald's. So back in 2017, they sold 80% of China business to CITIC and Carlyle, because at that time, they feel it's a little bit challenging for them to really compete locally with KFC and Yum China. And they would like to introduce partners to help them to further grow the market or the business in China market. And after a few years, McDonald's bought back 28% from Carlyle in 2023 and increased its stake from 20% to 48%, as they see there's great potential for the China business to further grow. And China, as one of the two largest economy, the importance of it has becoming more and more visible. So each company has their own priorities and challenges, and what Goldman could help is really to provide customized solutions to our clients, leveraging our local knowledge and market insights with team on the ground. And that's exactly what we did for Starbucks. So now I will pass to Xiao to share more details on how we made it.
Thank you, Jane. I think there are 4 topics I want to cover today. The first one is why the structure is set up in this way, being 60-40 split in terms of shareholding between the incoming partner and Starbucks. Second, what it means to be a franchisee in the sense that the relationship between the China JV and Starbucks parent post performer of the transaction. The third point is how we run the process. And the last point is how we think about value. So in terms of the structure, why it becomes 60-40? As Jane has mentioned, the overall context is the market is becoming more competitive, and the performance of the China business has been under pressure over time, both from a top-line perspective and from a profitability standpoint. So purely mathematically, it has been dilutive to Starbucks' performance globally, given how important China market is. And in that respect, they need help from local partners to provide additional access, capabilities, and additional focus in order for the business to grow in the future. But if you take a step back, China remains the second largest market globally for coffee and for Starbucks. And if you think about growth of Chinese coffee consumption or coffee consumers, China is still the place to be over the next 20, 30 years. So for Starbucks, is really about finding a right partner to help them grow the business instead of securing a full exit, because this is still an important market for them, and they want to be part of that journey and to enjoy the exposure and upside as the business recover and grow over time. And lastly, and very importantly for Starbucks, it's very important to maintain the consistency in service, in product standards and image, because China as a market will have a ripple effect in terms of how global consumers perceive Starbucks as a brand, right? So for them, in order to have that oversight, they need to have sufficient shareholding, because the governance right that come along with it, which means that how you can affect decision-making at the company level is usually commensurate with shareholding. The more shareholding you have, the more decision-making power you have at the company level. So by having a 40% stake in something slightly lower, Starbucks maintains sufficient oversight and control over China, such that it can ensure it's operating in a way that fits the global standards and image of Starbucks. But on the flip side, why are they selling 60%? There's a very simple answer, but not the full answer, which is China, given that it has been declining over time financially, by deconsolidating the business, it helps the global business to improve from a financial standpoint. But that's not the reason. For Starbucks and our client, I think for a very long time, we struggle with how much can we actually sell? Is the control we retain the right level of control that we have in order to achieve all the objectives that we just mentioned? But as we discussed that, one feedback we have received from partners, especially the ones we are prioritizing, is they also need sufficient skin in the game in order to be a capable and active partner, right? If they only have a small minority stake, they can be helpful, they can be supported on the sideline, but they cannot be expected to really drive the transformation. And for them, it will be very hard to execute the changes that they may deem as important to execute, because they do not have real control and real decision-making power. So as we discuss all of that with all the partners, it became an interactive discussion in terms of what our client wants and what the partners need in order to bring value to us over time. And as it became apparent towards the end, at least for this particular partner, giving them 60% control allows them to really drive the business and be a responsible steward over time. So that's why it's 60-40. Jane also mentioned that after this transaction, the China business become a licensee of Starbucks Corp instead of a fully owned business. And what that really means is a huge part of the value of Starbucks obviously is the brand, right? You are operating store under the Starbucks brand. You're providing the same products that are beloved by global consumers in China within the storefronts. The brand itself is very valuable and important, but the brand owner is Starbucks parent. So the China joint venture will become a licensee of Starbucks brand and all the ancillary products from the parent company. And the way they will fund that, economically speaking, because there's no transferable brand, there's no transfer of intellectual properties, is the China joint venture will pay a royalty to Starbucks parent over time in order to reflect the value they have been receiving by having and being able to use the brand exclusively in Greater China. And that usually, for example, is expressed as a percentage of revenue. For example, if I have $10 of revenue in China, if the royalty is 1%, then every year I'm sending $0.1 to the mothership as part of the licensing agreement. And by having the licensing agreement in place, we achieve two things. One is the licensing agreement itself come along with legal guardrails that provides additional control for Starbucks beyond the shareholding they obtain, right? There's a customary set of brand standards you have to maintain in order to be a good licensee. They want to work with you over a longer term. But also they receive a stream of royalty income effectively. So for Starbucks, their skin in China is not only the proportionate profit they have as a 40% shareholder, but also the royalty income that's only attributable to them. So by having this construct, even though they are selling 40% stake in China, in effect, they're actually retaining majority exposure economically to China business, because the royalty stream is important and meaningful. And that's also part of how we justify in the end that selling 60% is a reasonable outcome, because you are still retaining control through the shareholding you maintain, to the contractual guardrail you have, but also the economic majority exposure of the two factors that we talk about. And Jane mentioned two value reference point being the 13 billion and the 4 billion, right? If you look at the press release, there's a reference to 13 billion being the total value that can be realized by Starbucks over time in China. The 4 billion is being framed as the cash-free, debt-free enterprise value of the China business as it stands today as part of the transaction, approximately. The reason why this is such a large difference is a large part of the value ultimately sit behind Starbucks, is being retained by the parent, because there's three buckets of value. One is the proceeds you get by selling a 60% stake upfront, which is come along with this part of the transaction. The second bucket is obviously the value of your retained 40% stake, which one may argue it will increase over time as people drive growth and as people add value to the business. Lastly, and most importantly, is the value of the royalty stream you will receive over longer term, given the entire licensing arrangement. So the difference between 4 and 13 billion, the 9 billion difference is effectively driven by the last two buckets, which is the value of the retained stake and the value of the royalty stream over time. And how do you think about that conceptually, especially if you try to explain that to a board? Because the 4 billion is a real number. You have it in a contract. It's not the exact number, to be frank, but you have something very clearly defined. How do we define or articulate the other part of the value? So for the royalty stream, the way we think about it is it become effectively like a pure profit because there's no cost that come along with it. You are taking a share of revenue from your joint venture business in China, and that directly impacts your EBITDA and it directly impacts your EBIT, of course. And for Starbucks, they have been historically trading at 25 times enterprise value over EBIT on a very consistent basis. So effectively, if you receive $1 profit from China as licensing income, as a shareholder, I would expect to be able to give you $25 of value because you've been trading at that multiple consistently over time. And by the very fact that the multiple that Starbucks is trading at in the US is much higher than the multiple that's being transacted in China for this entity, having more economics lag behind to the licensing arrangement will be value accretive to Starbucks because those royalty streams will be capitalized at a higher multiple. So purely economically, if you have more royalty being left behind, it becomes better for us financially speaking, even though it's never that simple because as a licensor, you have to balance between how much profit I take away through the licensing income and how much profit I left behind for the licensee in order for them to compete effectively. Because the more profit you extract, the lower probability, obviously, the China business is left behind with, and they will need to have a higher threshold as they think about return for opening new stores because they need to make up more money in order to break even after factoring in that licensing income. So ultimately, I think the equation that we struck in the end is a balance that maximizes value for us, but also ensure the China business has sufficient headroom that it can compete and can grow effectively and competitively as a market leader. So I think that's the difference between the 4 and 13. If you think about what the 4 billion actually means, we call it the cash-free, debt-free enterprise value. That concept means the value of the business, assuming there's no cash, there's no debt, because if there's extra cash, you will pay for it. If there's extra debt, it will be a value deduct, right? So I think because the capital structure can be changed by us taking a more dividend upfront or us leaving behind more cash, the cash-free, debt-free enterprise value itself is a relatively objective metric by which you can measure the value of the business, irrespective of the resulting capital structure of the company. And lastly, I want to talk about process. So in a M&A transaction, typically you have what we call a two-stage process. In the first stage, usually we give them a set of information and they effectively have comparatively limited access to ask questions or see management. You are usually bidding by the book, so to speak, by reviewing the materials and try to provide a high-level indication. And if you make it after the first round, in terms of your value, your certainty, and the overall competitiveness of your bid, you'll move into the second round by which you have real access to management, underlying data for you to complete all the diligence and for you to negotiate contracts and finalize financing. That's your typical process. What's different about this transaction is we added a round before that. Effectively, before we ask parties to submit bids, we ask them to give us feedback in terms of what are they trying to seek out of this transaction. Why are you a potentially good partner for us? What value can you bring? What perspective you have? What capabilities you have? And what experience you have in the past? That helps us achieve two things. One is our client comes in informed in terms of who are the partners that are really serious and who are the partners that can potentially give us value over time. Because usually we're just looking at a sheet of paper that have numbers on it in terms of value, but here we're really looking for a partner, so you have to really get to know them. The other part of the feedback that we get is people are telling us how much stake they want to acquire, what structure are they trying to pursue, and also give us a flavor of what the market really wants. And right, because our client is always a bit torn in terms of whether it's A, B, or C. And by having that feedback, especially from the ones that are deemed as high quality partners, potentially, we have a perspective of what are the transaction structure that can likely lead to a success and achieve a balance of objectives between the buyer and the seller. I think that first round, we're basically soliciting reverse feedback, is something that ultimately play a large role in terms of getting to a good outcome with the right structure and the right partners. I'll pass over to Stephen to talk about what it means to work on the team, and especially as a junior banker, what value you can bring and what role you can play.
Thanks, Xiao. So before diving into our team structure, I would like to share a fun fact. So I actually started in GS Beijing office in 2020 before relocating to our Hong Kong office in 2022. As you may know, in many banks, those might feel like two different worlds in Beijing and Hong Kong. But here at GS, we really operate as one seamless team. And beyond that, we do have a truly global team as well. On this mandate, we work in total lockstep with our US West Coast offices. So our US office serves as the primary bridge to Starbucks headquarters in Seattle, while our Asia team manages the day-to-day with the Starbucks team and our investor universe. And because we work as one team, I was also deeply involved in the high-level strategic discussions with Seattle headquarters. Just in summary, the internal mobility and the one-team culture is actually, how we execute complex cross-border deals of this magnitude. And so at the time when we were executing this deal, I was still a senior associate at the team. So, a typical day for me is actually quite crazy at some time, given the 15-hour time difference between Hong Kong and Seattle. So I usually start by maybe 8 or 8:30 a.m. to catch the Seattle guys before they wrapped up the afternoon. And we spend our morning reviewing their inputs and comments, drive the process in Asia throughout the day, and often stay on until maybe 2 or even 3 a.m. to sync back up with the US team as they started their next morning. So as a junior on the execution team, I was the primary point of contact for external communications. And when you have dozens of high-profile investors, the logistics and communication are quite massive. I start my day with maybe 20, 30 unread emails and probably a very large cup of Starbucks coffee. And there were periods where my phone and email literally never stopped. I'd be on a call with one investor and see maybe other 2 or 3 investors and my senior bankers trying to reach me at the same time. And I understand there's a poll at the beginning of this session asking how many junior bankers do you think were stuffed on such a landmark deal of this size? So the answer is actually, so we only had 2 junior bankers from Asia, including myself, and another 2 to 3 bankers on the US side. So this lean structure is, I believe, one of the special sauce of GS. While other banks might throw a army of juniors at a deal, we keep teams small so that everyone has a seat at the table. My fellow junior in Asia was a first-year analyst. At the start, she's a bit green, but by the end, she was confidently leading calls with our auditors, lawyers, investors, and even clients. So I would say this is our apprenticeship culture in action. Senior bankers at GS here are incredibly intentional about providing guidance and giving juniors the space to step up. I personally, on this transaction, had the chance to interact directly with founders and heads of many high-profile investors. Basically, you're not just doing slides or aligning logos. You're developing the judgment and know-how that only comes from exposure to such complex situations. With that being said, I would like to start with a few memorable moments at this transaction. So I'll start it first, and then I'll pass to Jane and Xiao. So my story, the moment is about attention to details. So usually on landmark deal like this, confidentiality is everything. The market was quite obsessed with this transaction, as you may know, and for months, the deal team, was actually in a social blackout. So we didn't dare speak to friends or clients at buy-side firms, just for fear of a leak. And the memorable moment occurred when we reached the stage of filtering the investor pool for the next round. And around 1 midnight, I first got the green light to email the winners to schedule calls. And why we schedule calls instead of just simply sending an email is because we were quite paranoid about leaks, that we didn't use the word congratulations. So we simply asked for a time with the investors to discuss the next step of this transaction. And around 2 hours later, at maybe 2 or 3 a.m., I sent the second batch of emails to the investors who didn't make the cut. I kept the email almost identical, but carefully removed the 2 words next steps, right? Given they didn't make the cut. And I simply asked for a call to discuss the transaction. And then I just went to bed around maybe 3, 4 a.m. And by the time I woke up the next morning at 8, the market was actually already buzzing. So a few investors were calling us, asking if the absence of next steps meant they were out. So the deal team were stunned by how closely the investors, they are just trying to discuss this and trying to spread the news everywhere. And I think this is actually a masterclass in why every single piece of executions must be crafted with absolute precision. And the attention to detail is a real survival skill in banking. With that being said, I'll pass to Jane for her memorable moment.
Thanks, Stephen. I think one quick note on my memorable moment was that at the very last final stage of the project, we were invited to the board, special committee of the board meeting for the client to discuss the next steps and to share our views. And because the client is in the US and their board directors are across the globe, so the timing was actually 5:30 a.m. in Hong Kong. So I have to get up in 5 and also set up the call in the kitchen because I have 2 kids. They are still asleep. So I think that's one memorable experience. But I also think that it's a very special experience for us too, so that because in other firms as an execution or working team, you may not be seen by the client, and your efforts and work may not be valued by the client directly. So I think that's the also special sauce for GIS. And I will pass to Xiao. Xiao, I think we cannot hear you.
Hello?
There we go. We can hear you now.
Sorry. So maybe I will share like a very tedious moment, actually, but just for a bit of fun. Like for us, one of the most boring work is probably scheduling calls and scheduling meetings, right? Who comes first, who comes second, who takes which slot, and etc. But given how high profile this is, and obviously all the participants want to play their best foot forward, they all bring their most senior guys to every meeting effectively. And it becomes to such extent that like even scheduling meetings become a fist fight, because people will say, I have only this slot available because XYZ is coming from the US. This slot is a must-have for us because we want to be the first one. And you have very senior folks from private equity guys that calls our senior bankers that scream about why you are treating us unfairly, because I know we're only coming in second. It rarely happens for any deal. It probably only happens for a deal of this size and stature. But that's give you a flavor of how every moment or decision counts within banking, and especially in M&A, in these multi-party interactions, there can be tense moment, right? It can be a difficult call for you to have someone very another counterparty to call you to complain about something as small as this. But as you mature as a banker, you'll be able to handle these situations calmly and effectively.
Awesome. Thank you guys for that sharing. That was so much fun. And thank you so much for sharing your experiences. And so with that, we'd love to go to Q&A. So we do have an open Q&A box that is linked to something digital that is on here. But we would encourage you to just please use the raise hand button, and then we will call on you to ask your questions. As you can see, Xiao, Jane, and Stephen have really taken the time out to really share with you their experiences and their stories. So I really, hope that you make good use of this really rare and valuable opportunity to ask them questions. Before I do anything, I just want to remind those who are new here, please, this is a private session. It's closed door. It's invite only, so no recording, especially with the answers to the questions and anything related to the material today. So for those who have just joined, just a note there. Okay, so why don't we go with Roshan first? No? Okay, great. Let's move on to Sam Kudo. Louis Sam Kudo, do you want to ask a question? Thanks so much.
Hello, how are you? Hello.
Yeah, we can hear you now. Yeah.
How are you? My name is Liquido. I live in New York City right now. Yeah, and I got this invitation email that says joint venture deal between Starbucks and Boyd Capital. I looked up Boyd Capital, and it's really prestigious firm, I believe. And I have one question. How do you manage Starbucks brand consistency while allowing local flexibility in China?
Yeah, maybe let me address that, and thank you for the question. It's obviously something that top of mind for everybody, right? So on the first half of your question, in terms of how to maintain the brand, I think there are two parts to it. One is legally, you have to have the right guardrails for our client to protect it. And we'll probably not go into detail because there's confidential information, but broadly speaking, you need to have legal terms that protect your interests, right? And the rights you have in order for Starbucks to come in when things turn bad. The other part is, which is probably the more important, is actually finding the right partner, because as much control as you can get legally, ultimately it's the people that are making decisions. And it will be very hard to reverse things when you find yourself in a very difficult partnership. So I think for this transaction, there's a lot of principal interactions every step of the way, not in terms of diligence, because usually it's more about me asking questions about the business, trying to get a better view on value and risk. Here is more about just people chatting and sharing their perspective on how they think about the brand, the business, and making sure you are really finding the right partner that have a aligned interest and vision. And that's a huge part of the evaluation. And in terms of local flexibility, I think that's something we are trying to address by having the 60-40 structure. Because by having the 60-40 structure, except for a set of really important decisions, the local partner does have a driving seat. They can make decisions. And by having things being decided in China by people who knows China, ultimately the goal is you'll be able to adapt to the market more quickly and effectively.
Thanks, Xiao. We're going to move on to Matthew Go from Monash.
Hi, everyone, and thanks for the sharing and congratulations on this landmark deal. Just had a two-part question on partner selection. So given Starbucks' significant minority stake in the China business going forward, I imagine the decision wasn't purely about maximizing the upfront valuation, but because Starbucks would still be meaningfully exposed to the joint venture's long-term performance. So how did the team advise on balancing price against the sponsor suitability in that context? And secondly, in the context of China, the China market specifically, how would you advise on the attributes that matter most in a sponsor partner? For example, would you weigh deeper experience in operating Western F&B franchises across Asia against potentially stronger China-specific market access or relationships? Thank you.
I can take that. So I think in terms of evaluation, I think ultimately is a lot of different factors. There's value, there's fit, there's what you can bring as a partner, there's what you are asking for in a licensing agreement, because the economics and legal terms there are very important. There is certainty, and there is a lot of other things, right? I think ultimately is a holistic evaluation. Value is an important part of it, but it's not the whole part, right? Because even if you think about value, there's upfront value that you get as part of the transaction, but there's also longer term value in terms of how much the partner is willing to pay in the royalty in coffee supply going forward. So I think it's all these factors. When we try to evaluate that with our client, first of all, we synthesize all the value points. So it's not only about upfront value, but we try to give him the analysis that shows us this is the total value across all the buckets of value, right, from this partner, and evaluate people on that basis. Then, if you think about value, if there's a proximity of value between different partners, then it becomes questions about, are they the right partner? Do they bring the right set of capabilities? So I think it's a very comprehensive evaluation. It's unlike anything that we have done, honestly, because usually is the highest bidder wins, or the highest bidder with the highest certainty wins. Now it's really about finding the right partner that brings good value, of course. Yeah.
Cool, thank you. And then we're moving on to Jonathan from HKUST.
First of all, thank you guys. And as a person that lived in Seattle, I can see how you had to navigate that time difference. So my question is about how the deal was framed. So the deal had 13 billion. 4 billion was in the Boyu and 1.6 billion for the 40% stake, and the rest for the licensing economics. So two things I like your perspectives on is, one is, how did you defend the discount rate on that loyalty stream to the board, given Boyu holds the operation and the control of the joint venture? And the second question is, was the 40% stake and the licensing rates negotiated as a bundle, meaning Boyu would have given Starbucks more equity in exchange for lower royalty, or vice versa? Thank you so much.
It's a very good question. And it's a very technical question. So first of all, on discount rate, it's actually pretty simple, because I think the Starbucks parent, as they evaluate financially, they have a house view on discount rate. We simply use that, as simple as that. The second question, indeed, I think the value is negotiated as a package, right? So the more you try to move on licensing income, for example, if I ask for more royalty for Starbucks going forward, obviously the bidder will be giving you less upfront value. So it's a balance that we have to strike. I think for us and for our client, there's a there's an anchor point in terms of how the licensing economics should look like, because having that in China has implications globally. You cannot have a royalty that's too low in China, because otherwise all your markets globally will scream at you and say why you're giving them a favorable treatment. Right? Conversely, you cannot have a very high royalty that prohibits the growth of the business over longer term. So I think that the licensing economic become an anchor point that people can squiggle around sort of, and then you use that to negotiate upfront value effectively.
Awesome. Thank you so much. We're going to Emily Kim from University of Notre Dame.
Hi, thank you so much for your talk. And I just have one question about the middle step in the deal-making process. So during the additional feedback round in M&A, I was just wondering if there's like a red flag that the partners should look for in both companies. And even if there's a red flag, but this company's like still wants to make a deal, then in that situation, how does Goldman Sachs like navigate that complex situation?
So I think when we think about partners or counterparties, generally speaking, I think we look at what they have done in the past. Are they a credible partner? Are they credit worthy? And do they have good reputations? So I think we evaluate that holistically. So if anybody have a real red flag, to your point, I think we'll flag that very clearly, and usually they'll be kicked out of the process at some point in time. Yeah.
Thank you. We'll go to George Kuhn from HKUST, and then the next question, just so that people can line up, is Andre from Exeter. George, you want to go ahead?
Yeah, thank you so much for the insightful session just now. So my question is, given the asset-light trend that we've seen with McDonald's, Starbucks, and I think most recently Burger King moved with TPV, do you guys see this like joint venture structure becoming the standard template for MNCs looking to de-risk their China exposure? And if so, what does that mean for the GSM and pipeline for consumer or retail sectors over the next few years?
I wouldn't say it's a standard template. I think it's certainly an important part of that toolbox, so to speak, right? Because I think a joint venture achieve a balance of the risk and also retaining sufficient exposure and upside over a longer term. You will see that there's a lot more businesses that are being sold or exited completely, either in consumer or other sectors. So I think that in places where it's less strategic to the parent over a longer term, they can choose to sell it completely, and some people still do that. This is certainly an important playbook.
Yeah, and for example, you can see Yum China, they spin off their business in China and got listed. And also like Budweiser APAC, it's a spin off and listing. And also as Sean mentioned, there are other cases like people just have full access from China. It really depends on the objectives. But I would say, like from Goldman perspective, it's our great advantage because we have the global coverage and we have the One GS initiative and the team down the ground and close to the clients in US and EMEA. So I think that's definitely one of our best win in terms of the pipelines.
Thank you. Andre from Exeter. Sorry, Andre, we can't hear you. Can you unmute yourself again?
Hi, thank you very much for this talk. My question is, with 40% of veto rights, how does Starbucks keep their store count, pricing, how they manage business in China with just 40% of the stake? Do you have a question?
Oh, sorry, I was trying. Sorry, am I on mute? I'm sorry. So yes, sorry, I was trying to figure out if I'm on mute. So we cannot go into details, but as a 40% shareholder, they do have sufficient influence on the business regardless, especially on key decisions. And I think right now, Starbucks and Boyu have a very good chemistry. So I would imagine for important decision like this, in terms of pricing and product, they will have to discuss and come to a consensus, right? I think that's the benefit of having an important partner. But if you have, of course, as good as a partner you can get, if you only have 20 or 10% stake, that control oversight becomes a lot more difficult.
And you can
Thank
also
you.
imagine, for example, like Mixue, Guming, those milk tea players, they're all operating as a franchise model. So how they manage their franchisees. Basically, there are like the template, like master franchise agreements that people need to follow, ensure the like brand image, product offering standards, so on and so forth. So it's not something new for this kind of transactions.
Thank you. We'll go to
Thank you very much.
for the ones who are raising their hands, please make sure your school name is there because we do want to make sure that we're getting the right person. So we'll go to Rebecca Young from Oxford next.
Yeah, thank you. First of all, thank you so much for taking this time for this meeting. So I understand that the big part of appeal to Starbucks is your brand name, as in China, they often present themselves as more of a high-end coffee chain. But then, as you stated, like since COVID has started, China has been quite economically volatile, facing numerous downsides, with brands most notably such as Luckin Coffee, who sell cheaper products, being successful in outbidding China in their sales. And sort of since Goldman has taken a much more personal approach to this deal, serving both parties before everything is finalized, I'm just quite curious about how Boyu wants to move forward in the Chinese market, sort of balancing the prestige of Starbucks as a brand name while being competitive in the Chinese market, facing much more cheaper alternatives.
So first of all, I mean, thank you for the question. We do have to clarify we are only advising Starbucks. We're not advising both sides. And that's true for any transactions. And secondly, we probably cannot talk about specific plan that they have. And candidly, I think at this point in time, we probably do not know. But what's important and what we can say is they will respect and they will retain Starbucks' image and positioning as a premium brand. I mean, that goes without saying because that's the core ethos of the brand. What they can do potentially to address other market segment is expanding this on a more accelerated basis into lower tier cities. And what's interesting is in lower tier cities, despite Starbucks premium pricing, they actually have very strong economics over there because you may only have 1 or 2 Starbucks in a county. And because of how well it designed, the large store format and the welcoming environment become a very important gathering place for people, right? So it may be counterintuitive, but actually in the lower tier cities, some of the stores are actually the best performing stores in China. So I think it does not have to be a black and white decision between being premium and being able to compete in a more price sensitive market specifically.
And also having some competitors like Luckin doesn't always a bad thing for the market because with Luckin, like you can actually reach to more consumers. And if you have more consumers drinking coffee and having the coffee drinking habits, and then more and more customers become end users or target consumers of Starbucks. So you can see see it from the both sides.
Awesome, thanks. We'll go to Adele from LBS, Adele Zhang from London Business School.
Okay, so thanks for organizing this event and sharing this information. My question is, we all know that Boyu has a strong track record in Chinese retail and consumer brand investment. So beyond just selecting the Boyu as just financial partners, what specific capabilities Starbucks want to leverage from Boyu Capital, like the local extension, the digital operation, like this?
I think the specific to that is confidential, unfortunately, but I think you hit the right notes. I think they are looking for a partner that can help them expand in markets they want to play. For example, lower tier cities. They want partners that have complementary capabilities or access in technology and supply chain. All that comes into play.
Thank you. And we are running over. So I'm going to do one more question from, sorry, I know Ivanka or Yiwen Shang has been waiting for a while. So Ivanka Shang from Shanghai Jiaotong.
Hello, thank you for your insight for sharing. And I would like to ask a question. So from your perspective, what's the biggest execution difference between regular traditional M&A deals and cross-border MNC carve-out transactions like the Starbucks China deals you mentioned before? And what the additional key risk and deal terms that you will pay attention to? Thank you.
Well, first of all, you have a lot more calls at midnight, a lot more calls at 7 a.m. in the morning. But I think Starbucks is a one of a kind because there are other transactions that are also cross-border, but you do not have the similar level of tension from the market. I would say for Starbucks specifically and for high-profile cross-border transactions, I think that the key importance is that there's simply more parties you have to manage. In terms of counterparty, in terms of your client, in terms of people within your client at different part of the organization. So as a banker, which sits on the center of every action, you have to be mindful of how to manage the entire process, how to appeal to different people's priorities, and to ensure the interests of our client ultimately, right? So I think there's just more things you have to manage, but it's an interesting and fluid process.
Awesome. Thank you guys.
So much.
I know that we have a lot more questions, so I do this with every session. If you do have more questions and that I can be helpful with, or especially when it comes to anything more basic, I'm happy to collate them. So what you can do is reply to the email you got, which is the invite to the session. If you have any burning questions, we can try to see if, we can try and get those answered. But I'm really sorry that we can't get to everybody just because, as you can tell, my bankers are really busy. And also, I'm so glad to see that everybody's so interested in so many things and really asking really great questions. So before I end off, I want to do two things. Number one is, on top of this, we have a second workshop on the CATL A2H IPO. I know a lot of people know what an A-share IPO is, but we specifically picked this because it is an A2H share IPO. So it's a really interesting one that we wanted to encourage everybody to go to. If you haven't already signed up, please do. The QR code here will take you to the registration. It will be at the end of next month, and it'll be similar sessions. We will have the actual bankers on this IPO come through and speak to you guys about their thoughts, their funny stories, and really be able to give you guys an insight on why we do what we do and why it's so important. And then finally, before I go, I do want to also remind everybody that the next session will also be virtual. It will be at night as well, so please do be on time. And finally, if everybody is okay, we'd love to hear from you on your experience today. So we are going to flash the QR code here. This is a different one from the previous mentee. We will send this around as well, but please do give us your feedback from today's session. I'll leave this up so that people can scan, tell us what you wanted, what you didn't want. If you want more Q&A time, put it in there. But we really just want to know whether or not the session actually value added your experience and your learning of Goldman Sachs and what we do here. Finally, I do want to just say a big thank you to Jane, Xiao, and Steven. They're very, very busy people. Jane, you don't even look like you have twins. You just look so young. I'm like awed. But that just shows how much dedication and commitment the firm has to our junior talent, especially when it comes to talking about why we do what we do and giving you guys a realistic insight into the job, and not just about the investment banking is cool, come and do it, right? So the goal is that as you continue to do these sessions, especially the one next month, you will deepen your understanding of all the different types of products and advisory services that we can provide as a firm. And that by the time you hit Super Day with us in July or August or whatever year you are recruiting with, you will actually have that bank of knowledge to come and be a really strong candidate. Finally, I just want to say again, a big thank you to Jane, Xiao, and Steven. Please do sign up for our next session. And otherwise, if you have any questions, you can reply to Asia Campus Recruiting, and my team and me, we will get back to any specific application questions you might need. Final reminder, our summer applications for 2027 do open in July. We will be running these workshops all the way until July 1, which is when summer applications open. So please do keep an eye out for your email for any other further sessions. Otherwise, thank you all so much. And thank you to my banker. Thank you. You guys are so busy. I appreciate it so much. And we'll see you guys soon. Take care, everybody.